Good morning, good afternoon, good day. Welcome to my weekend market roundup, 12 June 2021. I'm Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques that I develop. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website sagarnandi.com, YouTube channel Trading Profitably, and Twitter handle Sagarnandi. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. These are the Q systems that I use. They run on the underlying TradeStation and MetaStock platforms. That was the last slide. Let's continue with the live system, starting with a look at the global markets, starting with Australian Market Index, AXJO. For the global markets, I am using Q Global running on MetaStock. In the weekly, we have a very narrow range candle. The backdrop color is bearish. It is in an uptrend. In the daily, it displayed two indecision at the top, followed by a bear release signal. For the last 5 days, price practically didn't move and it is staying at the upper boundary. It is bullish but overbought, and it is not at a location where I would like to take new long trades. Japanese Market Index, Topics. Backdrop color is bullish. In weekly, price came down little bit. We know that from the activity bar being in red color. In the daily, it is in an uptrend, went up since displaying the bullish headwind signal. In an uptrend, pullback, but there is no trade setup right now. If price can go up from here with a cyan color candle, that may give a go with flow trend following long trade setup. China Index CSI 300. The trend line supports are holding. This week price came down little bit, closed right at this trend line support in weekly. In daily, price is near the value area. Once again, if price can go up from here, gives a cyan color candle, the weekly being cyan, the daily cyan will give us a go with flow trend following long setup. FTSE Index, UK market, continuing to move inside the range in the daily, very narrow range. If we look at Friday's candle, that looks more bullish than the previous several days. It seems to be breaking out of the triangle pattern to the upside. Weekly backdrop color has changed to bullish. If daily can continue to go up next week, that may give us breakout long opportunity in individual fundamentally strong stocks. And lastly, India's Nifty 50 index made a new all-time high again. Last week also made a new all-time high. This week made another new all-time high. The weekly backdrop color and shape both are bullish. Daily is going up above the upper boundary. It is overbought. We are not going to buy at this point. The positions that we took earlier maybe at this point or this point in individual stocks, we may continue to hold those positions, at least partial position. All the global markets are either in an uptrend or breaking out from sideways market, which was true for UK market. There is no bearish signal anywhere. Let's look at the USA market. Let's start with the S&P 500 ETF SPY. SPY made a new all-time high. However, the weekly backdrop color is remaining bearish. That is tempering my desire to go long. In the daily, price is slowly going up, hugging this trendline support. I am not going to buy now because the backdrop color is bullish, and I am not going to short because there are just too many trendline supports. And as you can see, it takes significant effort to go below all these support lines. Not finding that easy once again. The trend line supports, these memory trend lines, they work pretty well. Bullish, but I am not going to buy because the backdrop color is magenta. QQQ. Very close to making a new all-time high. Let's look at the daily. Change the scale if I can change it. Let me delete this. Okay, let's look at QQQ using Q Elite on TradeStation. Remember in the earlier live sessions when price was at this point, right on that day, I looked at all the market ETFs and I mentioned that right on that day QQQ gave a go with flow trend following long setup. If you have not watched, you may watch the YouTube live session on that day. That time QQQ was the only market ETF that was giving a valid Q long trade setup. And indeed, since then price has gone up. It has probably covered the risk distance, and it seems it will continue to go up and hit the previous all-time high. Once again, using buy the low go with flow setup, we could have a profitable trade. Back to Q Global. Let's look at the other market ETFs. DIA. Backdrop color is bearish, and not only that, it has displayed a bear release signal in weekly. Therefore, it is weaker than SPY. Until last week, DIA was very similar to SPY, but this week the weakness is clear. The weekly candle shape is bearish. SPY candle shape was bullish. Both SPY and DIA backdrop color is bearish, but DIA shape is bearish also. And DIA displayed a bear release signal that was not there in SPY. And instead of making a new all-time high like SPY, DIA is inside a triangle pattern in daily, and price came down on both Thursday and Friday from the trendline resistance. And right when it was going below the trendline resistance, I tweeted about a short trade that I took using the daily trendline resistance. Let's go back to Q Elite again. When price was right at that trendline resistance in daily, I took a short trade, and let's review the short trade. The trendline resistance was at this point on Thursday. I'm going to change the template to fine-tune chart. In the morning session, I use 5-minute template. this was the location of the trend line resistance in daily. Here or here, somewhere here. Price barely went above that and came down. I was ready to take a low risk, extremely low risk short trade in Dia because of the daily trendline resistance. If you remember my earlier live sessions, I anticipated a similar short setup in IWM earlier when it was near the daily trendline resistance. It was near weekly trendline resistance also that time. I took a profitable intraday short trade in IWM, and using the same technique again I was ready the day before to take a short trade, and as price tried to go above the daily trend line resistance price level and reversed, I waited for the candle color to turn yellow. Q guideline says don't try to short on green color candle, so I waited for the color to change to yellow. There was an indecisive shape candle, and the moment price was going below that, I shorted Dia. Shorted around this price level and put my stop just above day's high. Price never even approached the stop, it came down, and when it hit the next support level, the intraday pivot levels, much more than risk distance was covered and I booked partial profit. At that time I moved my stop near the break even. I might have moved just above the early range middle level, just above this pivot level. I booked partial profit already, therefore even if I got stopped out on the remaining position, I would have exited the trade with a profit. And then I didn't watch the position anymore. Next day I saw that it came down again, my stop was not hit. So I was holding the position overnight after booking partial profit on Thursday. Then on Friday, price opened here, created the early range high and early range low, and Dia right after creating the early range broke below the early range low. So I didn't exit the remaining position. I moved my stop to just above early range high and left it there. Price came down, tried to go up, closed near Thursday's close. So I am continuing to hold partial position in Dia. Once again, using the daily trendline resistance, I was ready and I took the trade using a lower level interval, 5-minute interval, and a totally different chart template, the fine tune or precision entry chart template, where the entry relies a lot more on zero lag indicators like the pivot levels and the trend lines. The difference between fine-tune and entry chart template for swing trading is that fine-tune entry techniques rely very heavily on zero lag indicators, whereas swing trade entry techniques, they are okay to have some lag to remove the noise. That is the difference between the entry techniques, and that is appropriate because we are using different time intervals. So Dia, I took a short trade and I am continuing to hold partial position. I'm quite confident I'll exit it with a net profit even if price tries to go up on Monday, because I exited I think about 2/3 of the position already. So even if I take a small loss on 1/3 of the position, I'll end up with a net profit in the trade. On the other hand, if price can go down below the trend line resistance and then again below the next trend line resistance, I will be happily carrying the remaining position. I will not be in a hurry to exit it. Let's look at IWM. Okay, let's look at IWM here. I tweeted during one of the days that IWM was at trendline support. Actually, that was on Thursday. It was at trendline support in daily chart, and at the same time it was at memory trendline support in 30-minute chart as well as 5-minute chart. And when an instrument has so many supports in different intervals, it is difficult, not impossible, it's difficult for the price to break below that immediately. That came true once again. Thursday price could not break down the trendline support, and Friday it went up from there. Remember, in dia using trendline resistance, I could take a profitable trade, short trade, and using the same memory line but support trend line in IWM, you could avoid taking a short trade. If anything, you could take a long trade on Friday. Let's look at fine-tune chart on Friday. Thursday, price closed near intraday trend line support. This is 5-minute fine-tune chart for IWM, and we saw Thursday price closed also at the daily trend line support. Now Friday, did we have a trade setup? Not really, because it created the early range after price open, and then it didn't break above the early range high for a long time. And we were going to take only long trade because price was at daily trendline support. Using early range breakout, we would not take a trade because that breakout happened right near market close. That's too late to take a trade using fine-tune chart. So you don't take an early range breakout entry in IWM on Friday. Could we take another entry? Yes, we could. Using fine-tune chart, there are two techniques. One is to use early range breakout. Another is for price to come down to a support level, display a bull release signal, and then price go up with activity. But there was no heavy activity also at this point. You can see that heavy activities are shown by green dots. The first heavy activity came here on this candle. So that was already some distance from the recent low. So we wouldn't try to apply the bull release buy technique in this case. So we will not try to take a trade in IWM. In any case, if we are looking for a long trade on precision entry fine-tune chart based on support on daily interval, we expect the trade to come early in the morning. Breakout trade didn't come in the morning, and the bull release trade also didn't come in the morning because there was no heavy activity. So we will not wait for much longer to take a long trade. If the bullish momentum was there, we would have gotten the long trade earlier, not near the end of the day. So we could be ready to take a long trade in IWM, but we wouldn't take it because there was no proper setup. Let's look at the 4 ETFs once again. SPY, backdrop color still bearish, though price made a new all-time high. Not going to buy it, but it is bullish. QQQ, looking very bullish from the go with flow long setup that I mentioned right on that day. Price has gone up, and it seems like it's going to go up further, make a new all-time high. We are already long from this day. If we wanted to take a go with flow long trade, we are not going to take a new long trade now because it is some distance away from our entry point. Bullish, but already some distance away from entry point, and Dia, sorry, DIA. Dia is weaker than SPY, but it is right at trendline support, bearish backdrop, bearish traffic light also, but has support in weekly, daily both. We are not going to take long, we are not going to take short. I took a short trade using fine-tune chart on Thursday. I'm continuing to hold partial position. And IWM, weekly is bullish, daily had support on Friday but didn't give us a low risk entry point. None of the market ETFs are bearish. Dia is looking like the weakest one because it is the only one that is inside a triangle pattern, sideways range. All the others are in an uptrend, but none of them are giving entry trade setup. By the way, if I look back for a longer duration, if we see IWM is also in a sideways range over longer duration inside a box pattern. It has watermark resistance at the top, watermark support at the bottom, trendline support at the bottom as well. This sideways range is different from that of Dia. Dia sideways range is inside a triangle pattern and it is near the tip of the triangle pattern. If the breakout happens from near the tip of a triangle pattern, the force may not be there in either direction when it breaks out. If it breaks out before reaching the tip of the triangle, then the momentum is more. So even if it breaks out now, I'll be cautious to take a swing trade using weekly, daily. Bullish, but for some reasons like bearish backdrop color for SPY Dia, Dia being inside triangle, IWM being inside box, not giving that much confidence of taking new long trades. Is it bearish? No. Is it giving a lot of confidence to take long trades? That's also a no. That is based on the market ETFs. Let's look at the market internals and you will find something interesting in the USA total view. A single chart can convey a lot of information. It takes some practice to start using them, start to understand how they work, how they can sometimes predict what is going to happen or signal. I shouldn't use the word predict. That is like having a crystal ball. It's not predicting, but based on previous history, it's going to alert us at some points. So we'll look at the total view, but before that, let's look at the composites. The Nasdaq composite on the left, NYSE composite on the right. Earlier, the yellow line, percentage of stocks above 50 moving average, 50-day moving average, it was coming down for Nasdaq, but it was moving sideways for NYSE. So Nasdaq was relatively weaker. And right when it went above the average line, I mentioned that the weakness of Nasdaq, relative weakness of Nasdaq was disappearing. Since then, it has steadily gone up. And now I see in media, people are writing in media websites that it's time for considering buy in Nasdaq stocks again. That is about 2 weeks too late. Using Q techniques, and I showed that in live YouTube live sessions, we could anticipate that happening 2 weeks earlier and we could take the long positions in tech stocks 2 weeks earlier. Maybe there are some long trades now also, but we could start to look for those long trades much earlier because the relative weakness of Nasdaq was disappearing from here, and I mentioned that in YouTube live session at that time, not after the fact. If I change the interval to weekly to see the other market breadth information, and now I changed it to weekly. As you can see, Once you get used to the platforms, you can change things very fast. Others may be wondering how daily interval changed to weekly so fast. But once you get used to the platforms, you can do that also. Let's look at the other internals, new high low, percentage of stocks making new high versus percentage of stocks making new low is coming down for Nasdaq. NYSE is still not coming down. So this weakness is still there in Nasdaq, but it is not bearish because we don't have any red histogram in new high low. Relative weakness in Nasdaq, you may say. Whereas advanced decline and up down volume, they are not showing any weakness. If anything, it is showing that the internal breadth is quite strong, bullish side. And these are very broad markets, both Nasdaq and NYSE. Internals are looking quite bullish. Market is slowly going up. I'm not so keen to take many long trades, but internals are really strong, not showing any weakness. And let's look at the mega caps. Mega cap top 20 weekly is bullish. Daily is also bullish near the upper boundary level. Not a place to take a new long trade. After hitting the yellow direction line, where it gave a pullback long setup probably. If we could buy the mega cap top 20, we cannot, it's a custom index. In any case, it gave a pullback long setup and from there price went up, hit the upper boundary level. It's bullish, but it's near the upper boundary. We have not looked at the mega caps individually for a long time. Let's do that today. Let's see how they are moving. Apple, and I'm switching between Q Global and Q Elite. Back to Q Elite on TradeStation. Remember somewhere here I mentioned in YouTube live I took a short trade in Apple, and when price came to the trend line support I mentioned I booked profit. That was a very wise decision, isn't it, looking back? But that wisdom came after using the system for years and learning not to ignore the trend line support. Sometimes it may work ignoring the trend line support, but most of the time it doesn't. So the more you use them, the more you learn to book profit in short positions at trend line support. It was a very good idea I did that. Otherwise my bearish trade using put options would be in a loss by now. It went up right at the trend line support in weekly and daily. Once again, just like in IWM, it went up from support. You could use the trend line support to take very precise long trade in Apple right on this day, and you would have significant profit by now if you use verticals, let's say short call verticals. It's not giving any trade setup right now, but the trend line support was very useful for me to book profit in short position, and one could take a long trade also using fine tune chart. That I didn't. Is it looking very strong? No. It's inside a triangle pattern in weekly. For a long time, it has not gone up. Just moving down, up, down, up. There is some distance to go before hitting the next trend line resistance, but over a longer period, it's inside a triangle pattern, not a bullish stock at all. Amazon. Here also I had a short trade. I think I had taken somewhere here, somewhere near the yellow direction line, and I mentioned about the short trade at that time before knowing the result, and once again I booked profit near the trend line support, one of them here, or maybe there might be another one here. The trend lines may be redrawn, not redrawn, maybe broken once price penetrates them. In any case, it came to a trend line support, and I mentioned the exit point also in my YouTube live sessions. I shorted at the right time, booked profit quickly because trend line support was there, and I was aware of the support trend line when I took the short trade, so I was expecting to book profit quite quickly. That was again a very wise decision, and that wisdom comes from using the system for a long time. The more you use it, the more you get to understand the importance of respecting the trend line supports drawn here. If I didn't exit the trade in time based on support, I would have been in a loss by now. And Amazon is a high price stock. I did a good job to book profit quickly. By the way, if I go back to Amazon, it's moving inside a box. It's not moving in an uptrend if you look in the weekly interval. Apple was moving inside a triangle, Amazon moving inside a box. Tesla in a triangle in daily. Many ways you can draw the triangles, and certainly it's in a triangle in weekly also. Gradually rather coming down than going up. Not a bullish stock. Netflix not going anywhere. In a large box, white box in weekly, not a bullish looking chart. Facebook, this was one of the strongers. I mentioned in earlier roundups also Facebook and Google. We'll look at Google. This made a new all-time high this week, but then displayed an indecision at the top in weekly, created a false upside breakout at this watermark level, bearish shape candle in weekly, daily displayed a bearish headwind, and how beautiful. That bearish headwind came right at the very top. On the day, price made a new all-time high. When the bearish headwind came, it was also a red candle high. We would not take any short trade then. The very next day, it broke below the, or just about to break below the trend line support. Probably it didn't break it yet. And then price could not go back up. Now Facebook was one of the strongest, probably the strongest of the FANG stocks, and that also displayed indecision at the top, bearish headwind at the top, and breaking trend line support. That doesn't say bullish things about FANG stocks as a whole. If anything, if Facebook goes down next week, I may not mind taking a short trade using options. So my risk will be very small, and if I use verticals, I will not be in a hurry to exit the trade with a stop even if price went up. If I took a short trade using verticals, I would probably keep enough time, 1.5 2 months, and I will not try to put a stop. No stop is required for verticals. If Facebook comes down, I may not mind taking a short trade. However, it will not be a Q360 degrees short. Why? Because Facebook is fundamentally very strong. Let's check its fundamentals, and I will also look at its industry. I have not checked these things yet. I am doing this session live. If you attended my session earlier, which was a disaster, on how to make fresh installation on Q systems, I was using another computer, and for some reason the computer was very slow. That computer is slow but not that slow, so I was surprised. In any case, that was a disaster. I will have to do that session again someday. Now Facebook's fundamentals are very strong. Valuation is strong, undervalued, has strong earnings growth, so it is not a weak fundamental stock at all. Sometimes I may ignore the fundamental if I am trying to short a stock at the top. And that is the only dimension I may ignore sometimes, fundamental, and that is also for shorting at the top. But I like to have a technical setup. Facebook may give a technical breakdown setup next week if price goes down, but I would like to have industry also to be weak. Is it weak? Let's check that out from QH. Doesn't look very weak. It's steady, but let's see the industry rotation. Industry is not weak. If anything, industry rotation shows that interactive media services improved over last couple of periods. And if I wanted to check the alternate industry, that is also not going anywhere, neither strengthening nor weakening. Therefore, Facebook short is neither a 360 degrees short idea because fundamentals not weak, even industry is not weak. Do I short a stock like that? If I short a stock like that, I will reduce my size because it is not following my usual guidelines. It was okay to ignore the fundamentals, but even industry is not weak. So if I am trading, let's say, risking, for example, let's say $1,000 each in each trade, normally for Facebook, I may reduce that drastically. Maybe I just risk 1/4 of that or $250 in a trade. A wiser thing would have been not to trade it at all because there are other better shorting opportunities. I always tell that to my traders as well as to myself that why try to short Facebook. Sometimes I may do that, but it is not really going to add to my account profitability over time because there are better shorting opportunities, and I will look at some of them later where the fundamentals are weaker and probably the industry is also weaker. We'll try to find such trades. So we looked at Facebook. It was the strongest of the FANG stocks. May break down. We don't know yet because Friday's candle shape is mixed. But if it starts to go down on Monday, that may also break down. Microsoft. This was also one of the stronger ones. Bounced up from the weekly trend line support many times. In the daily, when it bounced up from the trend line support and then gave a bullish flow candle, that was the point to take a long position. Very similar to QQQ. Probably QQQ gave the go with flow long setup right on that day. After that, price has steadily gone up. This is the stronger of the FANG stocks and not showing any weakness. Not even like Facebook, which is showing some weakness at the right edge. Microsoft is not showing any weakness. At present, probably Microsoft is the strongest, but we still have to look at Google. Well, Google is also not far behind, made a new all-time high. So as of today, Google is the strongest of the FANG stocks. If we are thinking of short-term trading, Google is the strongest, then Microsoft, then Facebook. But Facebook, I'll avoid taking long trades now because the weekly displayed a bearish headwind. The others, Apple, Amazon, Tesla, Netflix, are not going anywhere for a long time. Not going anywhere, but not coming down also. That is sometimes holding the market. If you are observing the market regularly, you are watching probably just like I am that one day mega caps are doing better, next day mega caps are down. When mega caps are up, small caps are down. When small caps are up, mega caps are down. Almost every day this rotation is taking place. Is it bullish? I don't think so. I think it's not going anywhere, not bullish, just churning at the same price level, gradually going up because some people are buying. But again, if we go back to the market ETFs, look at the volume in the last couple of weeks in the daily chart. No volume at all. If anything, if you see, the big red bars are much more prevalent than the big or thick green bars since May. Last bullish days with thick green bars were in April. Now we are middle of June. In the middle we had heavy down days. Other than that, we have no volume at all. SPY, and if we look at the other market ETFs, if anything, the recent days were down days. Much more than up days. High volume days were down days. After that, not going anywhere, no volume. DIA, same thing. Bearishness is evident from the red activity bars, and IWM. Not only here, in the recent day also, the last thick bar is actually red. So price is gradually going up, but volume is not showing the bullishness. That's why I'm not very happy to take long trades. Are there some long trades? Yes, there are. Probably there are. We'll look at them. But before that, let's look at the market breadth total view. From mega cap top 20, we went to look at the mega caps individually. Now let's look at the total view. USA market breadth total view. Percentage of stocks where 50 MA above 200 MA is right at the 80% level. Percentage of stocks where price is above 200 MA right at the 80% level. These are very bullish, and it is holding steady, not coming down when you look at the total breadth. And total breadth is calculated from the 2 composite indices and 4 major indices. It's a real total breadth for the USA market daily interval. These two MA calculations are hovering near 80%. The yellow line, percentage of stocks above 50 MA, is near 63%. Earlier it dipped below 50% at 3 times, 3 points here in recent months. That was in January, March, and last was early May. Dipped below 50%, and reversal from 50% may be a buy point. Reversal from 20% level are much better buy points, but it has not been there for a long time. Last time it went near 20% was here late September last year and late October last year. Those would be good buying opportunities when yellow line goes to 20% level. Next, not relatively worse, but still buying opportunities could be when yellow line comes to 50% level and goes up from there. But I am much happier to buy them when it comes to the 20% level. In any case, it dipped below 20% at these levels, and now it is below 50% at these levels. 1, 2, and this is the last one. Now it is at 63. It is still below the average line. So among the MA calculations, percentage of stocks above 50 MA is showing relative weakness. It's not showing that much strength of the market. That's why these market breadth calculations are very important. Yellow line is of course more sensitive than the top line, orange line, or the bottom line, white line. So we pay more attention to yellow line for short-term trading. And it recovered from 50% level here, but it is still below the average line. So it's not showing the strength. That is, the internal strength is not there, though SPY made a new all-time high. Now let's look at the other studies. 3-month new high low. Every time it hits the extreme, upper extreme, it pulls down, and it hit again and came down a little bit. At the right edge, I am always looking for distribution days when price is at a very high level, but there is no distribution count at all. The last count, 1 day, 2 day, 3 day, all of them were accumulation. And at the right edge, no distribution count. That's why, and this I am saying for several webinars, and every time it is coming true. Every time I am saying that because there are no distribution counts, not even one, not even two, I am not expecting market to drop sharply and suddenly, and every time that is coming true. So I'm still looking for the, keeping an eye, not looking for, that's not the right word. I'm keeping an eye for the distribution counts. If they become 2, 3, 4, I'll be more cautious. Now in this chart, let me magnify the candle chart and explain, other than the distribution count and the 3-month new high low, what other information I have. And this I am going to release after some time. Let's remove the 3-month new high low. Now we have the candle chart. This is of S&P 500 ETF SPY. Candle chart itself is not so important. What is important are these distribution counts and accumulation counts. If a distribution count of heavy number 6, say 5 or 6, when it becomes magenta color, comes near the bottom of a swing, then we may start to look for a turn around day, and turn around day will come with a heavy accumulation count of 3 or more when the color becomes green. The accumulation and distribution counts were already there. I was already using them. You were already using them, those of you who have the market breadth total view. And now can you see that the candles are sometimes lighting up with cyan color? What about magenta color? Let me, magenta color is not coming so often, isn't it? Here. Sometimes we have magenta color candle and sometimes we have cyan candle. Those are, if you are aware of the HSA terminology, Phoenix days and Eureka days. How to use them? Let's look at Eureka first. When market has pulled back, we look for a turn around day. That is the first Eureka day. So here. And if the first Eureka day is followed by another Eureka day, that can be taken as a follow-through day. So instead of applying all the complicated mathematics formula for IBD, turn around day, follow-through day, those 2 days, you may just look for first Eureka day, that is the turn around, next Eureka day as the follow-through day. And we have the Phoenix also. When we see a Phoenix, especially at the market top, we are careful. What else do we have? If you see these skulls, scary skulls, those are Hindenburg omen. The first Hindenburg omen is an alert, warning, but people are more cautious when a second one follows within certain number of days. And in this chart, if we have a second confirmation of Hindenburg, that is colored in magenta. The first one is just a warning, that's in yellow, and a confirmed Hindenburg will be shown in magenta. If we scroll forward, we can see that we had a Hindenburg. Let me change the color to yellow. Hindenburg omen alert and then a Hindenburg confirmation. So I have now Hindenburg I have Hindenburg confirmation, I have Phoenix, and I have Eureka, which can be a follow through the second Eureka. And then you see some down arrows in magenta color. Those are market bingo or baby out of the bathwater. If the bingos come near the peak, then we may expect more bingo to come, or we may expect market to continue to drop for more days. And if bingo starts coming after price has already dropped, then we are looking for a Eureka day immediately after that. That will be a turnaround day. We could start to buy from this day, or if we wanted to wait, we could wait for the follow through day. So now we have everything that we need, not only from the Q angle, that is the accumulation distribution count. Let's go back to the template again. Let me close it. What all we have now in the market breadth total view, and it's amazing how much visual insight a chart can contain. Firstly, it is calculating total breadth, Q total breadth, not on one index but 6 indices, 2 composites, 4 major indices. Then it has MA calculations, percentage of stocks above, where 50 MA above 200 MA, above 50 MA above 200 MA. Then we have 3-month new high low. We have the accumulation distribution counts. Now we even have the Eureka and Phoenix. If I scroll, we have Hindenburg alert, Hindenburg confirmation, and bingo. This single chart is going to give you a lot of information, whether you should be cautious or whether you should start buying when Eureka comes at the bottom. So I'm loving this market breadth total view even more. I will do some more testing, and I am waiting for some feedback from some of the HSI experts like Dr. Jeffrey. Certainly, I'm waiting for some input. Once I fine tune little bit, I'll release it. The market breadth total view enhanced version. By the way, this total view is going to show Eureka and Phoenix and Bingo and Hindenburg based on both NASDAQ and NYSE together. So when you see a Hindenburg, it may be coming from NASDAQ, it may be coming from NYSE. If you are seeing a Bingo, it may come from either of them. If you see Eureka Phoenix, it may come from either of them. So no matter whether it is coming from NYSE or NASDAQ, you will be alerted and you will know that this is probably time to buy or probably time to protect your profit. A single chart can hold a lot of information, but visual information, and probably there is no better example of that than this market breadth total view. Is it showing any weakness at the right edge? No, there is no distribution count, there is no Phoenix, there is no Bingo, and there is no Eureka also in recent days. If we see Eureka at the very top, we are alert. That may be sign of exuberance, but that is also not there, just gradually going up. Not an easy time to buy, and there is not enough signal to short. Let's look at now the Q edge inside. Friday's market was very strong under the hood. All the sectors were up, 85% of industries were up, 75% of stocks were up. Percentage of stocks in the extreme bucket is only at 8%. At 40% level, we are concerned that it is time for a pullback, but it is just at 8% level. It may go up further before we are concerned about the bucket analysis. If we look at the 1 day to 1 month sector industry stock advance decline, interestingly, Friday is very strong, no doubt about that. Thursday less strong, and 5-day, 10-day is not showing equal bullishness. It's bullish, but it seems that under the hood, stocks are not going up as much as one would expect, seeing that SPY is making a new all-time high, keeps on making new all-time high. But from today to, especially today to 10-day period, is not showing that much bullishness. Yes, it's bullish certainly. There is no way to say it is bearish, but the red portions are not negligible for 2-day, 5-day, 10-day period. Is the sector advance decline, industry advance decline, stock advance decline. That is showing that stocks are not necessarily all going up. And I will look at some stocks later, the ones that I shared earlier alerting about possible pullback, they actually materialized. So you could use the systems, the unambiguous signals to protect long profit and also take short trades. We'll look at those stocks, but lastly, before that, okay, I didn't open. Let me open the finder to look at the technical breadth. Technical breadth weekly period not showing any weakness. All signals bullish, strength bullish, trend continuation bullish, reversal is also slightly bullish. So the weekly period technical breadth is bullish and daily period Friday even more bullish across all categories. So there is no bullishness. Is there any alert? The only alert that is continuing from previous webinar also, the bullish signals are coming. Many of them, 52%, are coming from extreme high levels. That is an alert. If we see the weekly headwind, there is no alert from there. Not a significant number of bearish headwinds in weekly interval. Only alert is 52% of bullish signals are coming from stocks that are already at price extreme high. That's the only alert we can see this week. And some alert looking at the red patches on these pie charts. I was not expecting so big red patches, seeing that SPY making new all-time high, QQQ about to make new all-time high. So not all stocks are bullish, and even FANG stocks we saw, many of the FANG stocks are not moving anywhere. Difficult time to take profitable long trades. Is it? Not true. That's not a true statement, and I will share several long trades that I shared. They did pretty well, and several short trades also I shared. They did quite well. So we can always find good trades, but the market is not such that we can close our eyes and take trades in either direction. What are the trades that I shared or cautionary signals I shared? Let's look at one stock, LPX. And I wanted to also do a fundamental analysis of that at the same time. Let's look at the original post on LPX, forest product stocks, and at that time when I shared it, May 6th, that's more than 1 month ago, forest products were literally on fire. Everybody was buying for good reason because they were going up all straight. But I saw on 6th May, more than 1 month ago, that from Q edge, the industry forest products declined sharply and suddenly with deceleration. Forest products was on fire, however, this stock was already overvalued, LPX. It had earnings growth, high earnings growth, but also decelerating earnings growth. And this stock was starting to come down. But it was just 3.4% below 52-week high. So when the stock was almost at 52-week high, probably all-time high, I'll check that out, but it was very close to 52-week high, I started to share cautionary signal on the stock because of the industry rotation, it weakened sharply. The stock started to come down. It was overvalued. On that day, most of the peer stocks were down. And let's look at the seasonality. Let's ignore the seasonality. I shared, you can review it later again if you want. These are the signals I shared. Indecision at the top, subsequent to another indecision at the top. 3 candles will gradually increasing upper tails, and the last 2 candles had bearish shape. Color was still neutral in the weekly interval, and daily gave a bearish headwind. After that, price tried to go up, created a false upside breakout. Traffic light color turned red at the right edge, and I mentioned that if this trend line support is broken, there is need to be cautious. And by the way, if you look at this snapshot and remember Facebook is also displaying indecision at the top. Facebook made a new all-time high. By the way, LPX at that time seems like it made a new all-time high. Facebook made a, I think, new all-time high, displayed indecision at the top. Facebook also displayed a bearish headwind, and I'm saying that if Facebook can successfully break below its trend line support, time to be cautious. The exact same thing I read on LPX more than a month ago. And let's look at LPX today and see how, using this analysis, you could protect your LPX profit and probably could take a short trade, very profitable one. I shared my analysis right on this day. After bullish headwind in daily, it tried to go up, reversed right on this day. And since then, price has come down. The bearish headwind in weekly again caught the very top. It's a sharp drop from there. Bearish headwind came right at the very top in weekly, came very close to the very top in daily. Indecision at the top came on the very top candle. This was a very effective alert. Let's look at now a bullish idea, and you will see how week after week, using Q technique, unambiguous techniques, the way I'm reading it now, the time when I shared it before knowing the result, you will see whether I am looking at industry rotation or fundamentals or technicals, all unambiguous. The way I am reading it, the same way you will read it, the same way a high school graduate will read it. There is no way two people can read the Q signals in different way, at least in 95% of the cases. Let's now look at a bullish idea I shared. So in this market, I am able to find bullish, bearish both. This was on spike 9 days ago. This was utilities sector stock I shared on 3rd June, 9 days ago. Utilities was the second strongest, and earlier it was score 1, the worst one. So even here, worst one, then 2, then it improved score and became the second strongest. So sector was looking bullish. I went to the industries and found this electric utilities. It was very nicely turning around, and I love turnaround candidates, whether on technicals, on fundamentals, and certainly on industry rotation. Electric utilities turn around industry with acceleration at that time, and I found this stock. For buying, I'm looking for strong fundamentals, either in terms of value or growth, better both, but in this case I found an undervalued stock, and the stock was starting to go up, and I noted it was also giving a high dividend yield, 6.8%. 73% of stocks are bullish, and I looked at the chart. This is a 4-week, 2 weeks, 1 week, 1 day, and all the periods were bullish. The 4-week interval bullish shape, bullish color, 2-week, very nice support, trend line support, strongly bullish candle, weekly interval, trend line support starting to go up, backdrop bullish, shape bullish, daily, higher high, higher low, bullish flow. Gave a go with flow long trade setup. If you ran the real-time sonar or real-time finder, you could find the trade during the day and buy it, not necessarily at the high, but somewhere in the middle. Because the sector was very strong, industry very strong, undervalued stock, great fundamentals, great technicals. And if you look at a glance template, it was giving a go with flow long setup. And if you look at the HSI like indicators, it gave a biggest move in 3 months. Mobo breakout and the Kahuna. And I mentioned several times, when you see biggest move in 3 months, depending on how the chart looks like, it's not necessarily exhaustion. It may be the beginning of a move. In this case, it was looking like the beginning of a move after a swing low in daily, and we saw 4 weeks chart, 2 weeks, 1 week, everything was bullish. So I suggested a buy idea, shared the idea on my forum 9 days ago. Let's look at SPKE today. For a go with flow long trade, our target price is upper boundary. It hit the upper boundary on Friday. You could take the trade somewhere in the middle of the bullish flow candle. You might not take it at the close because that would be already close to the upper boundary, but you could identify it easily during the day using top-down analysis, just like I shared. And by Friday, you could book partial profit. There would not be any reason to book full position because the weekly is looking bullish, daily is also looking bullish. You could book partial position and you could let profit run on the remaining position. Was there other bullish idea? Edu. Okay, let's look at Edu. I shared it several times. Let's continue to follow up on the trade. First, I shared it on this day as a bounce long when it bounced from a watermark, deep watermark support, closed below previous day's close. Then I explained I didn't exit the trade because I didn't keep a GTC order, low price stocks, Chinese education company. My stop was somewhere below this low of my entry time using protection signal. It stopped out weak hands on this day. Next day price tried to go down. Next day price tried to go down. And I explained all these days in previous webinars. Since the time actually I shared the idea on forum. Since that time I'm explaining how I am managing the trade, and I explained I didn't exit the trade because the protection signal was also not hit. If we look at the protection signal would be here. There was no close below that protection level that is calculated based on volatility. That is the suggested stop level. And if the suggested stop level is looking like far from the entry point in Q technique, that doesn't matter because we change the number of shares to keep the risk same. High volatility stocks, low price stocks, Chinese stocks, unknown stocks, they may move down a lot in terms of percentage, move up a lot in terms of percentage. So it will not be appropriate, at least not in Q guideline, to have a fixed percentage stop. The stop has to be, at least in our guideline, decided based on price volatility, and this was the safe stop position. On a closing basis, that was never hit. So I'm holding on to the trade, and I explained that in the last webinar also, and see how beautifully after that, right after that, a bullish headwind came. In fact, I think it broke above trend line resistance. Let's look at the template with historical memory trend lines. Indeed, first, it displayed a bullish headwind, in fact, a bull release also, bullish pressure, all on this day. Or did bullish pressure came the next day? Okay, bullish pressure came the next day. bullish headwind, bull release on one day, next day breakout from trendline resistance with bullish pressure. Friday's candle came down, but it touched the same trendline resistance that is broken. Usually price has a tendency to go up from there. So I'm continuing to hold the position in A2. It was a long trade that I shared several days ago, stock position, and I'm continuing to hold it. My stop was not hit on a closing basis. I am past 1 hour. Let me share two stocks. One is TJX, and then we'll end today's session. And I'll explain why I am looking at these two stocks. How did I find TJX? I actually found it from top-down analysis. I went to the strongest sectors in QH. Strongest sector on Friday was consumer discretionary. Earlier it was weak. Before that it was strong, but from 4-month period onwards it was weak. On Friday it became the strongest. So it is a turnaround sector. Looking at that, I drilled down, and I was doing all this in real time during market hours. I looked at the strongest industries. I selected all the consumer discretionary strong industries in one go, drill down into the underlying stocks. Then I looked at 1 star. You could look at 3 star also, and TJX would be somewhere here. TJX, apparel retail industry. Not great valuation, but very high earnings growth and accelerating earnings growth. So that is a 1 star candidate. Then I looked at its chart. Strong sector, strong industry, 1 star candidate. And then I looked at the chart. Let's look at the chart using Q Global, using top-down analysis. This is daily chart. Why it caught my attention is that displayed a bullish headwind, came near the white direction line. It found support near the same level earlier 2 times. Bullish headwind at same level to bull release, and right on Friday price broke above the trend line resistance with green traffic line. There is no Q trade setup probably, but seeing that after bullish headwind and near white direction line it broke above trend line resistance, strong fundamentals in terms of earnings, great industry strength, strong sector, one could consider taking, let's say, half position, half the normal size, or 1/4 the normal size as an exploratory position. And I did that. I took a smaller than usual long position on TJX on Friday. And now I am going to show something else. I'm going to change the country to India for some reason to explain my next stock. That is CTSH, Cognizant. I got an email from Google. I use Google's cloud service like many of you, and I got an email from Google, nothing related to trading, saying they have appointed some parties to handle their cloud service, something like that. And they mentioned 2 or 3 companies in that Google email. One of them was Cognizant, this company, CTSH. So I just got an email from from Google on my cloud service, and I saw Cognizant, so I looked up the chart. That is how I came to CTH, not from my Q technical analysis or top-down analysis. And I saw it was at previous support. Before that, it might be near resistance that may be acting as support now. Tried to go below that in weekly interval, but reversed with indecision at the bottom. The backdrop color changed from magenta to yellow. Not bullish yet, but changed from magenta to yellow at a longer term support. It may go either way from here if you look at the weekly. Then I looked at the daily, broke above trendline resistance here, created a trendline support, and every time it is trying to go below that, it is failing. It's not going up. The traffic light color is still red, but it is moving sideways. And you can see the Q squeeze started long time ago, somewhere from here. That shows volatility starting to contract from here. Q squeeze alerts us first, and you see the traditional squeeze came later. At the right edge, it is in a traditional squeeze, and Q squeeze started long time ago. And now price is failing to go down. I came to know about it from Google email, nothing related to trading. Looked at the chart, seems to me it is finding support, and if it fails the support, the stop will be very narrow. Stop will be very narrow. That's an advantage if I thought of buying the stock. But before doing that, I wanted to check its fundamentals. Let's look at CTSH.O fundamentals. Now Cognizant is an Indian IT company, but it is listed in the USA. So why I changed, if you noticed in QH, I changed the country to India and it has updated. Now it is India's sector, industry rotation, everything, bucket analysis. Because when I am looking at industry strength of this stock, I should, if I have access to the system, I should check the industry strength in India, not in the USA, because it is an ADR. But look at the fundamental strength. Great valuation, great earnings quality, small earnings growth, but it is accelerating earnings growth. This is 73% peers, but this is in the USA market. I would like to check how the industry strength is in the India market, because Cognizant is based in India. So I change the QH country to India and let's look at the industry strength. Fundamentals looking good. Technicals, very low risk entry point. And now in the India market, the industry jumped up from 71 to 90. And if you looked at the alternate industry, the score, relative score, jumped from 76 to 84. And when you see the percentage performance is like this, from left to right going up, then you know the industry is steadily going up in itself also. And if we look at the rotation, longer term, IT consulting and other services, and now it is in the Indian market, it is actually improving. Turnaround candidate. It was strong all along for a long time. In the middle, it weakened little bit and again going up. And then I found CTSH from a mail and I thought it is giving a very low risk buying opportunity. So I did take a smaller than usual long position in CTSH. TJX and CTSH, they are two different stocks. None of them are perfect Q long setups, but I took small positions. I know we are past 1 hour time, but let me share one possible short idea. Will I remember that? What stock was that? Give me one moment, please. Let me start icon. I know I am beyond 1 hour time, but it's probably useful to show how you can look at different stocks, not only using the standard Q trade setups, but anticipate a move and buy them. Just like I took long positions in LABU, and you can see FLGT, I booked profit in that somewhat. I have some healthcare other stocks also. I did take anticipatory position in CTSH, in TJX, and let me share some short ideas. At least one before I end. Not that the market is right for shorting, not that the market is right for buying either. So if I am buying or shorting, I may be taking smaller than usual positions and only taking trades where the risk is very narrow, just like in case of CTSH. My icon is loading. In icon, there is a watch list feature where I tend to track my stocks, whatever country it is. I can track them on icon. That's why I tend to use icon more than probably other people who just trade in the USA market. And if it is taking so long, what else can I do? Surprised why my computers are slow today. It's loading. Give me maybe 30 seconds more. Yes, interesting. Two stocks, CCI and CCJ. Let's look at them. CCI and J, very nice pair of stocks. CCI, remember the pattern? Bearish headwind at the top in weekly, bearish headwind at the top in daily. There was an indecision at the top, doji candle in daily. Next day, it broke out to the top, luring the breakout traders. But we wouldn't buy because it was already above upper boundary. We would have bought here using a go with flow long setup. That would be the perfect entry time. Textbook example of go with flow long trade setup. We would be booking profit along the way. We may be holding partial position. That's fine. Now, when the bearish headwind starts to come, we are careful about the long position. So I looked at this stock, the fact that it lured people to the upside and very next day dropped sharply with bearish headwind, bearish traffic light, bearish traffic light, bearish headwind, bearish pressure, bear release at pendulum high, high volume. In the alternate signals, the biggest down move in 3 months. That may not be the exhaustion, it may be the beginning. And it was at extreme high jump and thrust both, so it was time for a pullback. So I looked at it. The only thing is that there is a trend line support in weekly. If it was not there, I would be more confident to short it. I did take a small position in it using options. I think I used naked options. Small position in this stock using options. If it breaks down, gives me proper Q trade setup, no support nearby, I may add to my position. On the other hand, if it gives me, let's say 40% profit in a day or two, I may book profit in number of lots so that the rest of the lots are free. I get my money back and I just let my profit run. In fact, I did that on Dish, and I have to mention that stock. Dish is one stock I shared in previous webinars. A short idea. Again, a bearish headwind came. Price was going up sharply. And I think I mentioned it as a breakout candidate right on this day. And I showed the fundamentals were not weak, not weak at all. But I mentioned I am okay to ignore the fundamentals if I am shorting at the top, provided technicals look attractive for shorting and if industry was weak, which was true for Dish. So in fact, I had a short position in Dish and it was using put options, naked put options. What I did, as price came down, my profit by Friday sometime it hit actually 50%, but when it came 40% or so, I already closed a number of lots so that the remaining lots are free for me. Why I am doing that? Because I am not very bearish on the market as such, though this stock is looking pretty bearish. But anyway, I have booked partial position profit. The remaining positions are risk free. It has already dropped sharply. If it now goes up little bit, fails and goes down again, see, my first setup was short breakdown setup. Now if it comes down again after a retracement, that will be a go with flow short setup. So I may add to my bearish position. But my current bearish positions I'm holding are risk free now, guaranteed risk free. And why I mentioned this, the same technique I am planning to apply to CC, was it CCI or J that I shared? CCI. And let's look at CCI's industry and fundamentals. CCI, specialized rates. Check out its sorry, I should change the industry, the country for QH back to India, back to US. Let me do that. Give it a few seconds to calculate. Retrieving data from icon from Refinitiv. And you will find this analysis very interesting, how in even this market where many people are saying it is difficult, and it is difficult, I am becoming cautious, I am buying or shorting lesser than usual size. But if you apply the techniques with discipline, it's still working great. You may anticipate some trades, you may take some perfect trades like that. Both you can do. So I have set the edge to USA market. Let's look at this stock, Crown Castle International, CCI. Valuation medium, earnings growth negative, decelerating. So it's a 1-star shorting candidate. In itself, 51% of pair stocks were down on Friday. And if you look at the industry graph, now QH is on USA market. See how rapidly specialized rates decline, a sharp decline. Turn around again, but to the downside. I love turnarounds. It was one of the strongest, became very weak with deceleration. So this was an ideal time to short, and that is one reason I did take an anticipatory position even though the trendline support was there. The industry was super strong, became super weak suddenly, fundamentals are weak, displayed bearish headwind at the very top and false move. Signs of exertion, jump thrust, biggest down move in 3 months. So there were enough signals to take a short trade. And let's look at CCJ. Nice, isn't it? CCI and then CCJ. CCJ. Let's look at its fundamentals. I think its fundamentals are even weaker. Coal and consumable fuels. Let's check its industry also. The more you use the Q systems, the more you start to love the systems. Again, in fact, it was the strongest industry. We have 147 industry groups. In one day, it became score of 4. Percentage also dropped. And see the weakness. Turn around in its best form to the downside. One of the strongest industry became one of the weakest, and it was the most decelerating industry. And I found this stock, see the stock overvalued, huge negative earnings growth, decelerating earnings growth, best candidate for shorting. And let's look at the chart. Displayed a bearish headwind. After that, price did go up, then indecision at the top with a doji candle this week. Bearish headwind in daily, price gradually went up, but for last several days didn't actually move. 1 2 3, this week it didn't actually move. You can see the closing price relative to last week's price. In fact, it came down little bit. We know because the weekly activity bar is red. And I saw after bearish headwind, these are very powerful signals. Bearish headwind tried to go up, didn't go up much. Friday, the market was up. SPY made new all-time high. This stock came down, closed right at the low of the day. That is very weak, at least for the day. Displayed a bear release signal at price extreme high, and it has a red candle high as well. Biggest down move in 5 days, but it's not moving anywhere. The bongo turned yellow. Traffic light is also yellow. So not a perfect Q short setup, but looking at the weekly, daily HSI red candle high, especially looking at the weak fundamentals and the huge drop in industry strength. This stock has liquid options, so I took again a less than usual short position in options, and I should look at the fine-tuned chart, see how it closed right at the low of the day. Right at the low of the day. Couldn't recover at all. And by the way, bearish headwind came right at the top in the 10-minute chart also. So if you identified it early, you could short it at the very top. But I shorted it probably after it came below early range low, maybe even after it went below previous day's close. But I have a small profit. That's fine. It's not an intraday trade. I took an anticipatory trade. Not a perfect Q trade setup, but what encouraged me to consider the short trade is this huge decline in industry strength in one day. That is how in this difficult market also I am able to find trades, and sometimes making profit, sometimes not making profit, but my account has not eroded for last couple of months. So I'm quite happy with that. In the USA market, India market, my account has gone up significantly. I exceeded 1 hour by a large number of minutes, but I hope it was useful. I looked at more stocks, more techniques, how I am looking at live market, analyzing stocks, both for long as well as short. As always, thanks for attending. I look forward to seeing you in my next session, which will be Wednesday, most likely Wednesday, 8 a.m. Eastern Standard Time. I will announce the link on my Twitter page, and you will get notification from YouTube if you are subscribing to the YouTube channel. Thanks once again. Keep safe, and as you may see from the live examples, there is no reason not to do so. Trade profitably. Thank you.